Hello and welcome to everyone participating in today's webinar, Breaking Down the Value of Digital Transformation for Nonprofits. So my name is Yevgeny Zahenko, and I will be today both the presenter and the session moderator. And I am a manager in the Outsourced Accounting and Advisory Services Department. And in that role, I primarily work on providing controllership and CFO services to both nonprofits and professional services firms. And then I've also managed numerous accounting system assessments for various clients, which involves basically assessing the current state of their accounting function and then providing recommendations to improve that state and get them further on the road to digital transformation. So before we dive in, some quick housekeeping items, and just to clarify to everybody what you need to do to get CPE credit. For those that are seeking CPE credit, you will need to complete and submit a short evaluation survey that's going to appear automatically following the webinar. You're going to be asked to recall some CPE words that we're going to provide to you throughout. And please write the CPE words down, as they will not be provided at the end, so you will need them to receive your CPE certificate. Again, they're not going to be provided again, so please write them down. If you have any technical questions or issues during the webinar, please use the chat function and speak with our administrator for assistance. The slide deck and the recording from today's session will be available on our events page on our website. And finally, any technical support or CPE questions, those may be addressed to Nathan at nmclevine@grfcpa.com. So with that, today's learning objective is to provide you all with a better understanding of the technology used by organizations to achieve digital transformation. And with that, I'll also introduce our speakers. Eleanor Litwack is a partner in the Outsourced Accounting and Advisory Services Department. She's worked in accounting since 2005 and has played a pivotal role in transforming client accounting engagements. She primarily specializes in providing financial and organizational solutions to nonprofit organizations and professional services firms, utilizing state-of-the-art technology combined with deep industry expertise. Ms. Litwack brings value to organizations through her proficiency in systems design, cloud technologies, audit preparedness, and accounting best practices. Hannah Ryu is a member also in our Outsourced Accounting and Advisory Services team, and she works with nonprofit organizations and professional services firms, providing accounting-related functions and technology support. Her hands-on experience with products such as Tally, Bill.com, Nixonia, QuickBooks Online, Sage Intacct, also coupled with her background in computer science, allows her to optimize these systems for clients and also support them through the duration of their audit. And so now, as far as what we look to cover today, first of all, Eleanor is going to speak to the evolution of back office functions. We'll then go into the three-stage approach to digital transformation. I will then go over how to look into technologies, how to select them properly, and the implementation process. After that, Hannah will continue on with the role of tech tools in the accounting space. And I will finish off the webinar with the process of vetting new technologies.
Thanks, yeah. And when we talk about this topic, we like to start with the evolution of back office functions to sort of lay down the groundwork for what possibilities are out there, what we're already doing a really good job with now. But just in general, you could see how things have evolved greatly over the past decade. And I personally have been working with nonprofits for about 15 years, and firsthand, I've seen the conversation change from why should we go in the cloud? Isn't it dangerous? What does this all mean? To please take us into the cloud immediately. And it's interesting to think about what COVID would have been like if it happened, I don't know, say 10, 12 years ago. We didn't necessarily have these tech tools at our fingertips. Some of us had already implemented them prior to the pandemic. Others were able to during the pandemic. But the notion of everything being paper-based in a filing cabinet in an office is now seen as possibly more dangerous although it's a different form of hacking, it could be destroyed in an instant. You don't have access to it from anywhere. And it's, I think it's something that we've really seen change and be more welcomed in a massive way. Many of you already have your files in the cloud or you're working on it. There's also easy tools that you could use that are very common in nonprofits, box.com and Dropbox and those types of tools. And in general, there are items on this list that are sort of a wish list type of thing, like after the fact static Excel reports are shown here as a thing of the past. Most of the mediums, the small nonprofits that we speak to still have some version of this. It's not like we're all there yet, because that's maybe something that will linger around even if you do end up digitizing. It's probably maybe one of the last pieces that you can get rid of if you have everything operating together and integrated beautifully to get you out of Excel. But it's nice to sort of see the evolution here to give us hope for how far we've come and maybe to show some things that are possible, like an easy audit, easy expense reports, if we put forth the effort to make it happen. And that actually brings us to our first polling question, just to see where we are today with this group here. What does your organization, where does your organization stand in digitizing your accounting functions? So either you're completely cloud-based and digital, nice. You're getting there, maybe you've digitized some things, but you're still working on other areas. You're just starting to think about it. So most of your files are still paper-based, your systems are maybe not in the cloud yet, or something, some other stage here if you don't fall into any of these. So we'll give everyone a couple minutes here. And Yevgeny, do we have our first CPE code word?
We sure do. So again, just to remind everybody, if you want CPE credit after this webinar, you're going to need to write these words down. And the first word is function. Again, remember, write the words down. You're going to need them for the survey following our webinar. And our first CPE word is function, F-U-N-C-T-I-O-N.
Great. And with that, we have our polling results. Most folks here are getting there. So 80% are sort of, they've digitized some things. There's low-hanging fruit, as you'll see in a moment, where it's maybe easier to overcome. But there's still a ways to go to get to like a perfect integrated environment where not just accounting, but everything is one smooth picture. And then we have a couple folks here that are completely cloud-based, which is amazing. So if we talk about digital transformation in your organization, we like to break it out into 3 stages if you're going about this project. And it's not a quick project where you're in and out. It's important to take a holistic approach to look at the view as a whole. So don't make these decisions in a vacuum. Look at each of your functions: development, finance, operations, HR, programs, and take it strategically so that you can make decisions that later build into the ideal long-term solution that you're looking for and that aligns with your strategy, not just where you are now, but where you're headed. So in these 3 stages, we're going to start with identifying, we're going to move into strategy, and then execution. And you'll see in a moment, identifying is the stage where you're taking an inventory of where you are, what you have now, what tools are on deck, mapping things out. Then you move into strategy, which is where you sort of do an assessment, you're prioritizing goals, you're doing technology selection, and then the execution stage. It's time to make decisions, purchase the deal, and move forward with the changes that we want to make. So in stage 1, identify. Some of you are doing this in-house or you've already mapped it out. Others might be working with your accountants or some other consultant. You want to map out all your processes. If you're a Visio person, great, you could do it in a fancy chart. Otherwise, Excel works. But take each process, say in your accounting, on the accounting side of the house. What's the workflow? Like, whose hand does it cross? Where does it end up? Who's approving it? Where are your bottlenecks? It's important in this process of mapping things out to look for redundancies. So where do you have things where you're entering them once and then you're entering them again? If you're still, say, in paper-based or PDF expense reports, perhaps you have your employees submitting their expenses. So they're keying in their project codes and the amounts and whatever, and then whoever it goes to in the accounting department, yet again, has to key that in if you're not in some tool like Tally or Nexonia or Expensify. That's a redundancy. You have people entering the same information twice. So you want to look for that. Also in this stage of mapping everything out and where we are now and what does the big picture currently look like, if you're more sophisticated here, you could start assigning a cost to remaining in the status quo. So what would it cost us if we didn't make a change here? How do we measure cost? Maybe it's the amount of time it's taking people. If you have duplicative efforts, like how much of person one's time is spent here and person two, or it could be like less tangible costs, like board reports. So why are we always reporting on last quarter? Why can't they see more recent information? Why can't they see projections? There's a cost to all of that. So again, it's taking this identify stage to the next level, but absolutely possible while you're doing an inventory here to get more sophisticated and start assigning value and costs to the status quo. And also it's important to look at each area from all perspectives. So if you're mapping out your accounting workflow, you don't just want to ask your CFO, your finance director, or your accounting staff where their pain points are and what do they look at when they're approving. You want to look at it from all angles. So go to one of your program folks, go to your CEO, go to someone on the HR side. You'll find that each person has different pain points and they find steps in the process either less useful or more useful than you might think. So it's important to look at it from all perspectives, and this will also help you later on get buy-in from all angles. When you do make those changes, you're ready to transform and you absolutely need your employees to be on board. So you've taken their perspective into consideration and they could see that in your execution phase. And then risk ID. So depending what type of information and data you have at your organization, you have risks from different angles. Are you storing sensitive information on sort of programmatic aspects? Where do you have the possibility for a breach that would have an impact on your organization? When you're mapping things out, you want to identify your risks as well. And then with strategizing, you're looking at what you created. So here's the map and where we are now. And what are our priorities for solving those pain points? Where do we want to end up? Start with a blank slate. We see so frequently that these decisions for new tech tools or making changes are made sort of in a vacuum. So you have an opportunity to sign up for one system and it's so easy to implement and everybody wants it. But does it align with something that you might be moving to in 2 years from now? Say you have an accounting system switch on deck, you're just not ready yet. Whatever tools you choose today should integrate and be playing with the bigger picture, say the accounting system that you're going to implement later. So prioritize the steps and make sure that they all align into a nice big picture. There's sometimes systems where we feel like we need to stay in them. So we've had this one forever. Let's say it's a CRM. We can't imagine using anything else. Again, clean slate, empty the drawing board. What's best for the organization to move the mission forward? It's absolutely critical to take that lens and not try to cut corners just to accommodate certain systems. Also not to try to accommodate certain individuals at the organization. So say everybody agrees that you should digitize your expense reports or your AP, but you know there's that one person usually at the top that will never use the system. So how could we possibly do that? We can never get this person to use it. We've seen that, and we've seen accommodations to make sure that that one individual's habits are not bogging down the rest of the organization. So maybe it's giving them that admin that can actually help with their part of the using the system. Say it's an expense report system. Maybe that person has an exception where the admin helps them enter things. Everybody else is expected to enter it themselves. But it's a shame to sort of hold everybody back because of one or two individuals that can't change their habits and use newer systems. Technology selection here is probably the most popular step when you're strategizing, and Yevgeny's going to walk through that in deeper detail in a little bit. Yeah, and again, you want everything, think beyond finance. So you have your HR, development. It is possible to have a system where development and finance are integrated and the information is the same. So finance is getting what it needs for GAAP and for audits and for internal reports. Development has the information they need in their format. That is probably the most frequent place where there's a disconnect. Everybody's looking at it from a different perspective based on the date you raise the dollar versus the date you recognize it in the accounting system. There are very common integrations that integrate the two. So our system of choice for accounting for nonprofits is Sage Intact, which happens to have a beautiful integration with Salesforce, the nonprofit success package. That, for example, is a way that nonprofits are setting up their systems to have one point of entry, a central source of truth, and not duplicate sets of information where you have to figure out which one is correct and they don't align, and there's endless meetings to try to solve the two. It is possible to have it all integrated. When you're ready to execute, so you've made your decisions, you're pulling in resources, whether it's dollars or people, for the changes that you need to make. You're going to have defined champions. So if no one person is individually is responsible for the success of whatever step it is that you're taking, it'll probably fail. And that's just a change management point. So you have to have ownership of the steps and the process as a whole, clear guidelines. And this is also where you're going to get staff buy-in and also board buy-in and leadership buy-in. And work on a process of continuous improvement. You also have to keep in mind that throwing a tech tool at something is not going to solve the problem. So if you have folks that never enter their receipts because they're just sitting in their wallet and you're chasing expense reports all the time, giving them an app is not necessarily going to solve the problem. It's about changing habits, getting into a workflow that's perfect for the organization and accommodating to the individuals that are part of it. Timesheets is another good example. We see so many monthly closes that are bogged down by missing time entries. What is it about timesheets that's stopping the employees from entering them? Is it the technology? Maybe, but technology is just a tool. It's more likely the habit that needs to change, and folks need to understand what it means for them to not enter their time. So you want your program budget versus actual. Hey, we can't get you that till day 20 of the month because you and your staff are not submitting your timesheets on time. So if everybody is on board with the flow of information, what it means to get things in, and they have an easy way to enter it, hopefully that'll yield for a greater success rate.
Great, thanks, Eleanor. So before we dive into our next topic, take a moment, a little break, and go over our next polling question. And it is, which of the following is your biggest pain point with back office functions? Is it A, no single source of truth for your data points? B, lack of real-time insights into your data? C, limited forward-looking perspective? D, tedious and time-consuming year-end audit? E, lack of defined policies and procedures? Or F, none of the above? So again, while everybody's registering their answer, I'm going to provide the second CPE word. Remember, you're going to need this for the survey following our webinar. The second CPE word is insight. Once again, please write the word down. The second CPE word is insight. INSIGHT. So it looks like limited forward-looking perspective, and that makes sense. And it actually makes sense that lack of real-time insights comes in a fairly close second, because I think the two are pretty well linked. Without the real-time insights, it's very hard to be able to look forward, understand your data, and what is it really telling you about your organization and where it's moving. And obviously with a lot of procedures, a lot of processes being still paper-based, as Eleanor had alluded to earlier, it makes logical sense that the year-end audit is a lot more time-consuming, and it's harder for auditors to find the support that they need in a timely fashion. So with that, we're going to dive into technology selection and implementation, and specifically when you're thinking about a new technology, what are some of the key factors to consider? So the first one, obviously, us being accountants, we immediately start to think about cost. And Eleanor had mentioned earlier about you can go the route of, and it's advisable to do so, to quantify your current costs of operating in a status quo. And then unfortunately, what a lot of organizations do is then they compare that cost to what the cost is of the technology that they're considering. The problem is that obviously it's not necessarily an apples to apples comparison, because the cost of the technology that you're considering, you also have to factor in what are the cost savings of having that technology. So it becomes more of an ROI analysis, return on investment, as opposed to true cost to cost comparison. The one nuance I think when it comes around to looking at technology and doing that ROI analysis is that technology by its nature is constantly evolving, especially with the up and coming technologies that we always hear about with artificial intelligence, quantum computing, 5G. None of us, I think, even the experts, can sit and really know in the future, what is it really going to look like? What are our lives going to look like? What is the nature of the work going to look like? So when you're doing this ROI analysis with any technology that you're considering, you have to be a little bit careful, because it's not going to be as simple as saying, well, I think this technology is going to save us this many dollars, is going to generate this much in cash flows in the future, and do some kind of net present value analysis, because it's going to be extremely difficult to estimate what those true cash flows are going to be, dependent on how the technology is going to develop, dependent on how the updates that are coming to that technology are going to develop. So speaking about user training, I think most of us are probably aware that most vendors provide some kind of training package when you're considering their technology, and it's usually in the form of some kind of bucket of hours, or perhaps you're assigned a customer success manager that gives you unlimited training. What you always have to consider, though, is that that's the more formalized training. The real comfort level with the new technology is going to come from actually using it. Having your users, they're going to be most in the technology on a daily basis, getting comfortable with it, most likely reaching out to customer support multiple times a day for the first perhaps month, 3 months, 6 months, depending on how complex the technology is. And you really have to factor all of that out, because that's human hours that, again, that could be spent doing something else, providing more value to their organization, but they're critical human hours, because those people then become experts in that technology that can then do the training for others, perhaps record videos to save on your network for future use for new staff coming on board. The next point relates to technology and the overall ecosystem. I'm not going to talk too much about it right now. I have slides coming that are going to further illustrate the point, but I think the key takeaway, at least for now, is that, and Eleanor had alluded to it earlier, when you're considering new technology, you really have to think about how is it going to play in the overall infrastructure that you have set up right now. How is it going to interact with other systems? How is the data going to flow between these other systems? Are they going to be compatible from an IT perspective? So then when we get to user acceptance, this is a very powerful one, and it kind of rings close to home, because we at GRF had implemented a workflow solution probably about 2 years ago. And at the time that we did it, we had thought, the people making the decision to implement it, we thought it was the best thing since sliced bread, and it was going to drastically change our whole department and the nature of our work. Unfortunately, I think when we actually implemented, when we rolled it out, when we had our users, when we basically told our users to start using the technology, we realized that the actual usage, which was much lower than we would have ever projected. And I think a lot of it was because we didn't necessarily stop and say, what did the users really need? What are they doing right now? What is the current process? Where are the pain points in the process, as Eleanor had spoken to earlier? And what are we really trying to solve for? And so with that in mind, it's always important to consider, perhaps start with that. What are the pain points? What are you trying to solve? And how is technology as a tool going to solve those issues for you? Similarly, when it comes to general business strategy, once again, Eleanor, I think, drove the point home very well. Technology is just a tool. It's an enabler, it's a facilitator for you to be able to execute on your strategy. Unless obviously your strategy is to become the best in class digitally transformed organization of the 21st century. By itself, technology is just a means of getting you there more efficiently, executing on your strategy, and doing so in a more optimized manner. And then finally, as with anything relating to technology, you always have to consider IT implications. I'm going to speak to them a little bit more toward the end of the webinar, but to the extent that you can, and it's very advisable to do so, involve your IT team very early on in the technology scoping process, the selection process, and obviously it goes without saying in the implementation process, they have to be involved regardless. So with regards to the technology ecosystem, as I mentioned at the beginning of the webinar, I've done a handful of what we call accounting system assessments, where we come in, we examine, identify the bottlenecks, the processes, the workflow issues for our clients from an accounting and finance standpoint, and then provide recommendations as far as what system enhancements, process enhancement, people enhancements can you make to drive you to the kind of future state that you want to be in to be able to execute on your strategy. So in this case, this particular slide is an example of the future state that we saw for our client based on their strategic goals. And so the big takeaway here is that because now they were previously on a non-cloud-based accounting solution, we certainly recommended the first step to be to transition to QuickBooks Online, which is cloud-based. And in doing so, that now opens up your accounting system to speak to other third-party applications, such as Fathom, which is a reporting tool that does dashboarding, reporting on KPIs, operational metrics, cash flow reporting. It also opens itself up to now doing time tracking in another system like T-Sheets. That allows for job costing, which is something that was important to the client. And then also third-party applications like Bill.com, Tally, Bill.com being one of the big names in the accounts payable and payments processing industry, and then Tally being a fairly well-known name as it relates to expense report processing and credit card transactions. And then the client was already using two applications, Network for Good toward the bottom and GiftWorks, for tracking basically conceptually similar to their CRM. So tracking their donor information and then anything relating to gifts that they receive. And so the key takeaway from this slide is that, as you can see, even with something like QuickBooks Online, which is cloud-based, now you're opening yourself up to other third-party applications that can talk to QuickBooks, maybe not necessarily to one another. And what you have to consider is this what I want my ecosystem to look like, with so many third-party applications, data flowing between them, potentially having to reconcile data at times, potentially the data not syncing because of one of the applications not working. And so that brings me to the next slide. When you're thinking about bringing in new technologies, think about exactly what it's going to do to your infrastructure and how complex that infrastructure becomes. And so the other proposed recommendation that we made to the client in this case is, instead of looking into something like QuickBooks Online, seriously consider a more robust accounting system like Sage Intacct. And if you recall the previous slide, we had probably 3 more arrows going to different systems, and it added complexity into the whole ecosystem. And it meant that now you're going to have, again, reconciliations and all of that. With Sage Intacct, Fathom goes away. The reporting is customizable. It's very robust within the system. All of the data is reported on the same data sitting in the system. Similarly, T-Sheets goes away. There's a timekeeping module within Sage Intacct that does it, and it allows you to do much faster and probably much more accurate and efficient timekeeping and project costing. Bill.com Tally stays. There's other solutions that you can integrate with Sage Intacct to do that. And then finally, the 2 arrows, the 2 clouds that we had at the bottom for Network for Good and Donor Perfect, those go away with something like Salesforce, which is one of the best in class CRMs out there for nonprofits. And again, it has integrations with Sage Intacct, so the data is accurate and it's reconciled and it's being reported on in Sage Intacct's reporting module. So if we dive into implementation and specifically some key things to remember there, we always recommend what we call a phased approach. So in that regard, you have basically two main key phases, with the third phase being training, and that's kind of an ongoing phase with any implementation. So in the first phase, we call it the go live state. That's basically you setting up your main systems. So in the example of something like what we had in the previous slides with QuickBooks Online or Sage Intacct, get those set up, get those ready to be able to be used by the users to do your normal transaction processing that you were doing under your previous system. So basically the bare minimum for you to continue your accounting operations without much customization. Which brings us to the second state, the optimized state. That's when you really spend the time talking to your users. What do they need from a reporting standpoint? What do they need from accounting? Setting up those reports in your system, customizing, also customizing your settings with regards to user permissions, all of that, making sure that if you have third-party applications, the settings between those applications is correct, the data is flowing accurately. So that's the optimized state. And then, like I mentioned earlier, training is kind of it's not necessarily a final phase, it's an ongoing phase, but it's one, as I mentioned earlier, is going to be ongoing. Just because you take a few classes from the vendor that you've now selected as your future technology, it doesn't mean that you're proficient. It's an ongoing process. You're going to be working with customer support. You're going to be coming to issues that you're going to have to really think through, that is perhaps never going to be covered in any formal training. And then, as with anything, any project, really, any engagement with any outside vendor, you really have to define your scope. And as it relates to implementation, the big takeaway here is that who's really going to be responsible for, after we've implemented, after perhaps we've gotten to the optimized state, who's going to be in charge of making sure that future updates to the software that you've selected are handled properly and do not cause any disruption to your accounting processes. With most organizations, that's probably going to fall on the internal or outsourced IT department. But depending on how you work it out with your vendor, you may decide that they basically handhold you, keep you abreast of all the updates, make sure that to check in with you when key major overhauls come through, that they schedule time with you to go over what it means for you and your team. And then the user setting customization, again, a lot of the times the vendors can do that, set up your users whatever profile they need to have. But oftentimes they won't know exactly what the users need to be doing on a daily basis. So there may be a bit of help from both sides, both the person implementing this technology and the vendor doing so, to really get that set up correctly. And then the other key takeaway is implementation it really has to be managed like a project. It has to follow the typical project management guidelines. You have to have your milestones. You have to have your weekly check-in meetings. Maybe not, depending on the size of the implementation and what you're implementing. You may need a software to track all of it. So I'll get into a little bit more, but you have to take it seriously, because if you don't, all of the time you're going to be wasting after it's quote unquote implemented, you're going to be regretting. So real quick example of the phased approach in the go live state. So some key examples of things you can focus on. I mentioned earlier, setting up the accounting system. In our example, it was either QuickBooks Online or Intacct, making sure that they can continue handling the typical transactions you're used to doing on a daily basis under your old system. Being able to produce simple management reports. I think for most accountants, that's your statement of financial position, statement of activities, perhaps the statement of cash flows. Then this is a good time to look over, as you're transitioning between systems, if you have any data redundancies. So some examples of those may be, you look and you have vendors that are, maybe there's a slight misspelling in the name, but it's exactly the same vendor. So you clean those up, you get rid of it. Same thing on your customers. Maybe you have duplicate customers. This is the time to clean all of that up so that the data going into the new system is all correct and as perhaps streamlined as it should be. And then with something as simple, I would say, as Bill.com as far as setup, this is probably a fairly easy thing that you can do during the go live state. It could probably be done in a day with systems like QuickBooks Online and Intact, as far as integrating them, making sure that you're all set up, your vendors are set up. So it's probably something that doesn't need to wait into the optimized state. And then again, in something like the optimized state, you're looking at setting up things like project and job accounting, job costing. And with that goes hand in hand timekeeping, so that the data that you need for that job costing is also flowing through. And then finally, the KPI metrics, the operational metrics, that's the thing that's really going to drive the insights that you all mentioned earlier in our polling question. You're having trouble getting those insights and being able to look forward into the future with your accounting and finance data. And real quick, the implementation plan, I spoke about it earlier. This is the comment about it really needs to be a defined and structured project management endeavor. And as such, you really need to be very intentional about defining who's going to be doing what as far as the project scope with your vendor. What are the key milestones? Who's going to be delivering on those milestones? When are they going to be delivered upon? What are the key dates? Who are the stakeholders in all of this technology implementation? Who's going to be involved with actually training, testing it out, and all of that? And then where are the key deliverables? And then most importantly on this slide, what is your contingency plan where things don't go according to plan? And I think the one probably 100% thing sure you can be 100% sure of is something's not going to go according to plan. So who's going to take accountability? Who's going to make sure that we change the dates around? How do you change the date around? What is it going to mean for the overall implementation? Do you have other things waiting in the wings that's very dependent on this implementation happening by a certain date? How do you communicate accordingly to make sure that's pushed ahead accordingly as well? And with that, we have now reached our third polling question. And it is, which tech overhaul is the most challenging to implement, in your opinion? Is it AI, which again stands for artificial intelligence, RPA, which stands for robotic process automation? Is it going paperless in general? Maybe an accounting system migration, or is it something else? While everybody's recording their responses, I'm going to provide the third and final CPE word, which again, you're going to need for the survey following our webinar. Our third CPE word is automation. Again, that CPE word, third and final, is automation. AUTOMATION. Yeah, no surprise here. I think a lot of people, I suppose the low-hanging fruit is to say it's time to change our accounting system. Whenever I've done these accounting assessments, it's been made clear that the source of the issue is with the system that sits in the middle, which is your accounting system. And oftentimes it doesn't speak to other systems. The data in it isn't correct. So immediately you start to wonder, there needs to be a change. And it is a process. It's not an easy process. So completely understandable that that's the overwhelming majority of the responses.
So I'm going to start off with some technology buzzwords or terms that will be used throughout the rest of today's session. These are terms that you have likely heard of at some point, but you may or may not know the definitions of these. So we want to make sure that everyone is able to follow along. So these are a few that Yevgeny just mentioned in our last polling question, but artificial intelligence, or AI, is probably the most popular term on this list. So AI is the theory and development of computer systems able to perform tasks that normally require human intelligence, such as visual perception, speech recognition, decision-making, and translation between languages. And interesting that I've heard about AI is that unlike humans, AI doesn't sleep, it never gets worn out, and it doesn't make mistakes. So we can prefer AI to do certain tasks that help us with these repetitive processes that get us worn out so that we can save energy on other things. Next, machine learning is an application of AI that provides systems the ability to automatically learn and improve from experience without being explicitly programmed. This is in our day-to-day lives, even though you may not realize it. If you have a Netflix or a Hulu account, these streaming services give you recommendations of things to watch based on things that you've watched in the past. So it's learned based on your selections, even though you've never actually told Netflix or Hulu the certain shows that you like to watch. Robotic process automation, or RPA, is a software that can be easily programmed to do basic repetitive tasks across applications. And we will show you a neat example of this shortly. And then we have optical character recognition, or OCR, which is the machine recognition of characters. This one by itself might not seem super exciting, but when it accompanies other tools, it helps other tools in everyday life and the finance and accounting world. So some practical use cases for RPA in outsourced accounting, and then how you could potentially be using it to save yourselves time in your own accounting departments. So these short-term cases are things that are a little bit more simple to implement. And then the future use cases may take longer to implement, but would still be great use cases once they're actually built out. So short-term, things like downloading and saving reports. We can do this with our outsourced clients, but you all can do this internally as well. This can be anything from a bot logging in and pulling your bank statements and saving it for you, or it could be the bot logging in to your timekeeping system and pulling time reports from all of your employees so that you can run payroll. There's tons of different use cases for this. And then for those of you that are doing your accounting in-house, you can use RPA to auto-post journal entries for you each month. So you might use this for something like a depreciation journal entry or various other entries that get posted on a monthly or regular basis. Some of our future use cases, bots could be used to create and send out invoices to customers on a monthly or yearly, quarterly basis, depending on your industry. Similarly, the bot could then follow up on invoices that have been sent and send emails out to those customers for outstanding invoices. Finally, bots are also good for preparing your financial package on a regular basis that you can then present to your boards. These are all things that we can do to help save time and free you up to do more analytical thinking and take away some tasks that eat up your time each month. So this is an example of an actual bot that was built out. If we can hit play on this, it will walk us through this process here. So this is an actual bot where it logs on to QuickBooks and saves financial reports. So this is not a human here running anything. This is actually the bot that goes in, it clicks the button. It has a login that it was assigned, and it knows where to go within QuickBooks. So it knows the client to go to. As you see it navigating QuickBooks here, it knows where to go for the custom reports. And then it knows to download them, and it will then save these reports in the correct location. So here we go, it's saving it on Google Drive in the file that it was told to save it in. So this is a pretty simple bot because it only uses a few steps. Bots can take on much more complex tasks, but this would be an example of something that could be built out early in your RPA processes to save you some time. So some practical use cases for artificial intelligence, or AI. This is probably the #1 thing out of the technology terms that we listed out that can be concerning to people. However, it can be very useful and practical for many different tasks. One technology system that we use and we recommend to most of our clients that Evgeny mentioned is Bill.com. So Bill.com has an intelligent virtual assistant that uses AI and OCR together to help auto code invoices. This helps speed up the processes and lets you take on more high-level tasks throughout the day while cutting your time in the AP side of things. Sage Intacct is our preferred accounting software that was also previously mentioned, and they came out with their Intelligent Time. This uses AI to be a virtual time assistant and helps you keep track of your timekeeping when you're working on different tasks throughout the day. Power BI is a very popular tool that has a natural language processing tool, and that allows you to ask simple questions such as, what was my revenue last month? And then the dashboard can interact with you and show you what your revenue was last month. Again, this allows you as a user to ask simple questions without having to manually dig through your dashboards and reports to find out this information yourselves. And then this last link is a short little clip. And right up here. So this is what is most likely concerning to most of us. Short. So here on the left, this is an example of AI. This guy created a system where he's typing in transactions as text. And then on the right-hand side, the AI is actually posting the transactions and then showing what the effect would be on the financial statements. So the guy is not manually typing everything in on the right. This is just an example of a future use case where you could, what we could end up seeing in the accounting and finance world with AI. We'll head back over here to the PowerPoint. Okay. I mentioned Sage Intacct's Intelligent Time. So this is an example of AI that would be running in the background while you do your daily tasks. So it would know if you're in a meeting for an hour and then you're in Google Chrome doing research for a project and then you're in Slack for a few minutes. AI would recognize all of these tasks and help code your time for you. So for all of you that need to keep timesheets within your organization, but you struggle to keep track of your daily tasks and writing everything down, something like this could be useful. This isn't something that we are actually using ourselves, but we're going to show you things that are out there and possibilities that will continue to arise in the future. And then Bill.com with their EVA, their intelligent virtual assistant, helping automatically code invoices for you. So I mentioned this uses OCR to recognize the text. And so here's an example where you can see that various parts of the bill are being recognized. So the highlighted fields, Bill.com is picking up the invoice number, the amount due, the invoice date, and the bill description. So if Bill.com is able to pick up these fields across all or the majority of your invoices, you can save a bunch of time, again, to focus on more analytical thinking and other tasks throughout your day.
Okay, so how do we go about vetting new technologies? What are some things to consider? So as I mentioned earlier, you always have to align it back to what are your true strategic goals. Technology, once again, it's an enabler. It's a facilitator, it's a tool, but it won't by itself get you accomplishing your goals. It will get you there faster, perhaps more efficiently. Similarly, when you're looking at these new technologies and you're in the process of actually discussing with vendors, send them your specific use cases and make them basically prove to you that their technology can handle it. Because at the end of the day, they're going to give you all of the videos in the world to show that their technology is going to change your life. But if it can't change your life and specifically what you need to do, at the end of the day, it won't really matter. The other thing of note is we've now, and all of us, our 3 presenters today are on our GRF Outsourced Accounting Advisory Services Tech Committee, and it's been very powerful for us as a department to structure it that way, lend accountability to the process, making sure that we're all staying on top of technology, researching accordingly, and discussing as a group. And then finally, what are some of the specific IT considerations to look into as you're considering and actually looking at new technologies? So with regards to future strategic goals, I think most organizations, they're probably going to be focused on the bottom line, that net surplus or deficit at the end of the year. And so obviously the 2 components of that are either going to be driving your top line growth, your revenue growth, income growth, or optimizing and cutting your costs. So if on the side of growing revenue, if that's your key strategic goal, let's say grow top line revenue by X percentage over the next 5 years, then you're probably going to be looking at technology such as a CRM to help optimize your entire fundraising development process, make sure that the people involved in those departments have the data that they need to track down the people that they need, report on it accordingly, hold themselves accountable, and make sure that you're able to report on your goals and see the progress. Similarly, on the marketing side, you're probably going to be looking at things like business intelligence, BI, or data analytics tools out there. They're going to be able to tell you very quickly where are your marketing campaigns having the most impact, why, basically giving you that data so that you can then adjust accordingly if you need to, or maybe perhaps target a specific location or a geographic region that has been under targeted for many years, but that's perhaps where a lot of your revenue growth can come from. And then similarly, artificial intelligence, it's now being used for understanding who to target better, again, more so from a marketing standpoint, where the leads coming from, evaluating those leads very quickly to, once again, enable your sales or fundraising or development team, whatever you call them, to focus on those prospects that are going to drive that revenue growth. And then on the cost side, Hannah had already spoken to a lot of these. Artificial intelligence for bills processing, time entry, expense report processing, all of that. It does it much faster. It's getting to the point where it does it much more accurately. And again, it never gets tired. And similarly, RPA, it's not as smart perhaps as artificial intelligence, but it can do it much faster than a human can. And it also doesn't get tired, and it can always run in the background and do the things that humans arguably shouldn't be doing anymore, and give them the time back to do the things that they want to be doing, most of them, I'm sure, and should be doing, which is critical thinking, collaboration with others, that human element that the machines right now are not able to do and perhaps never will be able to do in the future. And then finally, something like a tool called Zapier, which basically connects tools or systems that are inherently disconnected and allows them to talk to one another, share data amongst one another, and that drives automation in your entire workflow process, which again removes humans from your workflow, removes potential inaccuracies, and lets the machines do the work that they're best able to do. And the comment that I made about pertinent use cases, again, if you take some isolated instances, if you're looking at reporting, makes sense, send them a sample report, perhaps a more customized, more difficult report that you run on a monthly basis, and have the vendor prepare that report for you using their tool. Make sure that it's something that would work for your users, shows the same data, and get them to do it. Similarly, when it comes time for workflow, make them demonstrate and show you that a specific process that you have and the different notifications that you need to get throughout the process, have them show you that their tool can handle it, and what does it all generate as far as the data, and is everybody being kept in the loop throughout the process. When it comes time for coding using artificial intelligence for coding of bills or what have you, send them actual data from the past that you're comfortable with sharing and see how the AI would handle it. If you're noticing a lot of mistakes, then it may not mean that that particular solution is able to handle your data just quite yet. It will develop over time, but maybe there's others out there that have a more robust data set with which to be able to code your data. And then finally with RPA, similar to the video that Hannah showed earlier, send them a sample process and have them literally create that same bot for you and send you a video of that bot handling the process exactly as you would need it to be handled. Speaking about the technology committee, again, this has been very powerful for us at GRF, specifically within the outsourced accounting and advisory services department. But it really just, if nothing else, ensures accountability into the technology process for us. And so generally speaking, we meet probably every 6 to 8 weeks. It's a little bit more frequent than quarterly. I think for most starting out, quarterly, perhaps maybe even semi-annual is a reasonable cadence. The other thing that it does is, again, on top of ensuring accountability, it also helps spread out the work of doing these demos, reaching out to vendors, talking to them, figuring out the pricing. Whoever's on the technology committee, you can split it across, enable your team members to really understand these technologies well and report back to the committee. The third point is probably the most important one, and you really have to be intentional about who you want on that committee. And there's 2 key elements to consider there. Number one, as Eleanor mentioned, this whole technology process, to the extent possible, you want to involve other departments. It shouldn't just be an endeavor involving finance and accounting staff. Similarly, with your committee, you want to involve the program staff. You want to involve the development staff because they have their own needs as far as technology that need to be shared and need to be heard. And similarly, even within each department, to the extent that you can, have people from different levels on the committee. So you may have somebody that's more of a staff level junior position, somebody that's a manager position. And what that helps ensure is that you're actually getting the people that are going to be using the technology. Again, more so at the junior level. They're going to be the ones most likely using it the most on a daily basis, and it needs to work for them and their needs need to be heard. And then in our case, our technology committee, it inevitably became the central point for technology suggestions. So we have team members reaching out to us regularly saying, hey, I have this process. I don't think it's efficient. Is there perhaps a tool that can do it better? Or they say, hey, I'm actually working on this client. I noticed this tool. It's something for you guys to consider, maybe across other clients or just maybe internally for the outsourced accounting and advisory services department as a whole. And then finally, this technology committee, I think I can speak for myself, but perhaps maybe for Hannah and Eleanor as well. It's forcing me to continuously be reading up on technology, learning, researching it, and it's quite interesting. And we discuss it when we meet, all that's happening in our industry and what it means for us.
Absolutely agree with that.
And then finally, to close us out, as far as these IT considerations I keep referring to, cybersecurity is a big one. I probably don't need to speak about it. We're all aware of it. And that goes hand in hand with protecting your sensitive data. So IT needs to be aware of whatever technologies you're considering. If it's a new IT accounting system, how do you ensure that perhaps personally identifiable data is protected in the system, especially if you work in industries like healthcare or others where it's, forget about just the ethical standpoint. There are compliance issues that if you're not really protecting it, you're going to have a lot of issues down the road. And then finally, as far as integrating all of these systems, if you're considering new technologies, how do you ensure that the systems talk to one another? Are the systems, do they have open APIs to have data flow seamlessly? And then specifically as it relates to IT and IT support, who's now going to be supporting all these systems you're considering? Again, it's probably going to fall on the IT team, but they may not be aware of all the intricacies of these specific accounting systems. So they need to be in the loop throughout the whole process from the beginning to understand exactly what it's going to mean to the ecosystem. And then finally, kind of similar to the tech support, who's going to be provisioning system access? Again, is it going to be IT? Is it going to be the people that are the champions of that technology within the department? A lot of things to consider there. So I think based on where we are on time, we probably won't have time for questions, I think, Eleanor.
Yeah, and everyone can feel free to reach out. We live and breathe this topic and we love to talk about it, bounce ideas. So feel free to reach out with any questions. Also, probably a disclaimer that we should have started with. We're not talking about replacing humans with machines. I think if you have a person that's dedicated to entering AP and that's their whole job, it might be scary to them to hear that you're considering an online AP solution, but really you're future proofing their job because it will be moot, whether it's in your organization or others. If it's not moot already, it will be. So you're really upskilling them and changing the way they work to bring them into the future as well. So appreciate everybody joining us today. And again, our information is here on the slides. Feel free to reach out to Yevgeny, Hannah, or I, and we're happy to help.
Yeah, absolutely. And just one final reminder about the CPE credit. Remember to have the words, and you're going to need them for the survey that's going to follow our webinar if you want to get CPE credit. Thank you all once again, and have a great day.